So essentially, guys, what you need to understand with anything to do with trading is that we move in cycles. So price moves high and then comes low and then goes high and then low, just like that. And what price also does is do the opposite. So price makes cycles to the downside. So if it's doing this, moving higher, we are making runs to the upside, which means we are bullish. And if it's coming lower, so what I'm going to do is just move that up there. Move that up there. If price is moving lower, that there is a bearish market. So that there would be when prices actually come in lower. And it's really just about identifying these areas. Okay, so when price is bullish, we're moving higher. When price is bearish, we are moving lower. Now, what you then need to consider to yourself is, how am I going to get myself into the marketplace? The simple fact of the matter is, you have to buy when price is low, and you have to sell when price is high. But one thing you need to understand about trading and the time frames you get within trading is that price is fractal. So this happens on every single time frame, right the way from the monthly, the daily, to the 4 hour, to the 1 hour, to the 1 minute, to the 5 second chart. Price is moving in cycles all the time. And essentially it carries on moving in cycles the whole way around. When price wants to come lower, it breaks structure and then the cycle carries on to the downside. But we need to identify opportunities within these areas here. So it's all about how we go about trying to identify areas for us to get into the market. So as an example now, and I'm just going to bring that down here. If we are looking to get ourselves into the market, if we are looking to get ourselves into the market on a bullish run, this here needs to be on a higher time frame. So let's just say that there is, a daily time frame. So that there is your daily time frame. It can be your 4 hour, your 1 hour, whatever you want, but we're going to go with the daily for now. You would anticipate price coming down into this low to then go higher. Once that happens, you can take buys. Now, what you have to understand is that on a smaller time frame, it isn't just going to look like this. Okay, what it's going to look like is you're going to go down a time frame and price is going to be making highs and lows, lower highs, lower lows, lower highs, lower lows, until it gets into your area, and then it's going to start pushing to the upside. Once it pushes to the upside at your low, that there is when you're going to get into the marketplace. Because what's happened is you've done something called you've accumulated inside your point of interest area, which is the low of this daily area. So just to draw in a bigger fractal area, price will be making a low, it will come lower, and then it will make a high. And then you're going to look to get in on the retest. Now price has to come back and retest anywhere in this level here. The reason it has to come back and retest is because this is where price is in drawdown. The cycle has continued here to the upside. Price is now coming down into this area here. So we can identify a whole range of different reasons to what price is going to come to in here. But there's a couple of things I'm going to go over with you that we need to obviously look for. But essentially, this price action here is what you're going to be looking for in here. So it's almost like it's fractal. It happens all the time, every time frame you go on. And all you're doing is you're waiting for a break of structure. Now, something else that's left into the markets is liquidity. So essentially, this here is your accumulation. And when price accumulates, you want it to do a couple of things. Now we can see price was obviously coming lower and then it's broken higher. Then the important thing is that we've made a new low and we've come in below this low here, because that there is what's called as a liquidity grab. So the fact that we can grab this liquidity, make this new low and then make a high, gives us reason to believe price is going to come back in and then push to the upside. So that there is you waiting for accumulation to happen, taking out this high here, taking out this low here, sorry, and then price break into the upside. So now, and I'm just going to change the color of that to make it signal it up. If we do the opposite, we want to wait for something to happen. So what we see is price is making its way higher. It's coming high, and then we've made a new low. Once price has made a new low, we can see price coming back to then come lower. This here is known as distribution. So this here is your distribution. So this is a bit of revisiting the basics kind of thing, but it's important to keep going over. And what's important about this factor here, I'm just going to change this back to red because this is our down area. We have swept above this high here, meaning we have got a liquidity grab. So because we've now got a liquidity grab, price has come down, retested the level after sweeping liquidity. That there is a solid area. So if we go back onto the higher time frames, and you can see you want price to push higher from here at a daily time frame. This here is your daily area or your 4-hour time frame, whatever. You then want to go on to maybe a 1-hour time frame or something a bit smaller, and just observe price action, because what you'll see is price coming lower into your area to then push higher, to then accumulate and push higher. So you're waiting for this here to happen. So that there is a smaller time frame. We're going to call that maybe our 1 hour, something like that. Now, to be really precise, you could wait for the same thing to happen in the 1 hour. But essentially, if price is moving within your daily area, within your daily low, that there is evidence that price is going to move higher. Therefore, it gives you evidence that you can buy in this area here. So your entry will be, at the low just here. So your stop loss will be here, your entry will be here, your target will be a new high on the daily time frame. Hopefully this here is making sense. So to do it the other way around, when price is making lows, you want to be looking to get in and sell when it's high. So the right thing to do now would be to wait on a smaller time frame for price to come into that high, distribute, and then sell off. It's just waiting for evidence. So this here is your daily level. So we can call this daily area. This here can be your 1 hour. Just like that. So we've got our 1 hour distribution inside our area. We've also taken this liquidity right here. You can be setting an entry here, your stop loss here, targeting a new low. Hopefully, this is making more and more sense as we go along. And that is all you have to wait for to get into the markets. Entry in here. Same for the buys, entry in here. And that's it. That is the basics of what we're looking to do. So this is your accumulation. This is your distribution. We wait for it in our point of interest on a higher time frame. We have to go in line with the higher time frames. Trading does not need to be overcomplicated. Trading can be done very, very simply. And this is what it's about. It's about keeping things super simple. It's about waiting for liquidity grabs. It's about waiting for price to get into your point of interest. And then it's about taking the entry, taking it to a new level. And that's essentially what we're looking for. We're looking for accumulation inside these areas, and we're looking to buy low, sell high. So just to kind of recap it and say it on here, this is the area in here. We want to buy when it's low. And when we're selling, we want to sell high. So we want to sell when it's high. And it does not get any more simple than that. That is essentially what we're looking for. Now, to move it on even a stretch more, there are certain things called discount and premium levels. Now, within these discount and premium levels, you're going to be buying or you're going to be selling. Okay, now what you need to focus on here is the trading range. So let's say, you know, price is moving higher on this daily area right here. Now we know and we've identified price is going to move higher. So we're going to call that there. That's going to be green. We're going to call that the daily again. We need to measure the trading range now. We have a Fibonacci tool. We're going to measure this range here. So we've identified that there is the low, that there is the high. What I am going to do now is get my Fibonacci tool out, which is right down here. It's called a fib retracement tool. I'm going to measure the trading range from top to bottom. I've got this 50% marker here. I've measured the trading range just like a ruler, and I'm looking to measure what is below on a bullish time frame. I'm going to measure 50% and below. Anything that is 50% and below is considered a discount area. So this here is where I'm looking for price to come into. And I'm looking to buy price in there. Now, once I've measured my trading range, I no longer need these fib tools. I don't need my ruler anymore. So I'm going to get rid of it. Now, inside this discount area, I'm looking for a few things. I'm looking for an IC candle, which is short for institutional candle. I'm looking for an FU candle. I'm looking for imbalance. Anywhere within there, that is my point of interest. So if I can get or identify an FU candle, an IC candle, or an area of imbalance within here, that there is me placing my entries. So, you know, I'm just going to change the color there. That's the last down candle. I'm going to make that a little bit thicker. So let's just say this here is our, you know, FU candle or institutional candle. I'm just going to highlight, give that a color. So let's call that, you know, IC candle. So we've got our institutional candle inside there, and let's just draw out some, you know, imbalance randomly as well. So imbalance here and here. So I can also see that within this area here, oh, get rid of that. I can also see that within this area right here, there is imbalance. Imbalance. So I've identified a few different areas within my point of interest. So this here is your imbalance. This here is your institutional candle. This is the discount area. We measured the tool with the ruler. So now I'm going to be on a smaller time frame looking for price to come even lower. So now I can identify where I am. I'm now on a 1 hour time frame and I'm watching price come into my area. And I'm waiting for price to fill the imbalance, react from my institutional candle to then push higher. If I see this happen, this here is accumulation inside your point of interest. That there is a very, very highly probable setup. And this can happen on your 1 hour chart, it can happen on your 15-minute chart, you know, anywhere you see the accumulation. And I can identify we've swept the liquidity here. I can identify with broken structure. So we were bearish on a 1 hour time frame. We are now breaking above here. And I can identify we've done it in our discount area on our higher time frame at our points of interest, which is the institutional candle, and we've filled up this imbalance as well. Now we've done that. This is a really, really, really solid trade. A really, really, really solid trade. And the beautiful thing is, with this 1 hour candle, there's going to be an institutional candle in here. There's going to be some imbalance in here. That's where you're going to enter off of. That's your entry, guys. So that there is your discount levels. Now, to flip it to the other side, if we're going bearish, just like that, we're going to change that to red. You need to, again, identify where you are. So we know we're on the daily time frame. Okay, perfect. I'm going to make that a little bit bigger. Now what I want to do is measure the range again. So we're going to do exactly the same thing again, but we are coming the opposite way. So this is the low. That's the high, sorry. This is the low. So I'm not interested in 50% below now. I'm now interested in the higher part of it. My interest now is getting a reaction at the premium level. This here is actually not a discount area, it's a premium area. So think of it like you want to buy something at a discount and you want to sell something at a premium, just like in real life with anything. And we've identified on a selling market, on a bearish market, we are in a premium area. So now what I can identify, what I can do firstly is get rid of these fibs. I can look inside my premium area and I can identify what I want to happen. So we need to be looking for IC candles, FU candles, imbalances. I can't bloody spell balances. Okay, and then within there, I'm just going to put that at the top to make it look a little bit neater. In our premium area, we can look for these areas. So again, I can identify, this last push, which is an institutional candle. I'll show you what they are as well, so don't panic. So I'm just going to change the color of that. I'm going to make that a little bit easier to see. I'm going to make that a little bit smaller. So now, within this area here, I can identify, right, that there is my institutional candle. So I'm going to call it my IC candle or my FU candle, whichever one. And let's just pretend there is a nice healthy area of imbalance in there as well. So we've also now got imbalance, which is right here. I'm not going to do that. I'm going to highlight it. Hang on. So there's your imbalance right there. I'm just going to change that, make that a little bit smaller. So here we've got imbalance right in here. We've got our institutional candle. We've got our imbalance. We've got our trading range. We're on the daily time frame. We've measured it. We're in the premium level. We've identified a point of interest. So now we know where we want price to go. We want to sell price when it's high. And now we can sell price when it's high. We've got our areas. What do we do now? We simply wait. So I'm on a 1 hour time frame or a 15-minute time frame or whatever you want. And I'm looking for price to come in, fill this imbalance, hit this institutional candle, and then distribute. Not accumulate, distribute. So I'm just going to change that color there to like a blue or something. I'm going to highlight this as my 1 hour area. So I'm within my point of interest. We've got our, areas of accumulation, distribution, whatever. And I've identified a break of structure after we have swept this liquidity, swept that high there. This here is a valid entry point. And again, within this range here, you're going to identify imbalance, institutional candles, FU candles. And this is all you're waiting for. So this here is known as your premium area. Okay, and the one above is your, hang on. This here is your, get rid of that. This is your discount area. Just like that. So, just to quickly recap where we are with it and what we've done. Go all the way to the top. Copy that. Now, if you're bullish, you're moving higher. If you're bearish, you're moving lower. You want to be looking for something called accumulation. This is a daily time frame, and this is the sort of thing you want to look for. So that there can be, 1 hour playing on there. Now, to explain what this is, I'm just going to highlight that. This here is your accumulation, which, as you can see, if I put the arrow down there, is here. So you're looking for this pattern within your daily area. Accumulation, price is moving lower, sweeps this low, which is liquidity. Price breaks structure to the upside, comes back down, retests, and then gets you in. You're then looking for something called distribution. When you're looking for sells, you're looking for the high to be broken in a bullish market. You then look for a break of structure to the downside. Price comes back and retests and then takes you down. To really go over what you do with them, you're on a daily time frame. You're looking to buy when it's low, and you're looking for price to come into this area here. So that's the low of your daily area there. And you're looking for price to accumulate in this area here. So this here is your accumulation example. Okay, right there is your accumulation example. It's accumulated inside your daily area. So now, when you want to sell, this is going to be your distribution example. Because it's bearish on the overall trend, and you're on a 1 hour time frame, and you're looking at a daily high, which is where you could identify selling opportunities. You see price distribute, you see price break structure to the downside, and you identify price dropping. And then to go into even more detail, you're looking here in a discount area. A discount is where you measure the fibs. We've done that. We've identified areas of imbalances, FU candles, IC candles, things like that inside this area here. You're looking for accumulation inside your areas. You then go down a sec. You're looking in premium areas now when you're selling, and you're going to sell at a premium. So you sell at a premium, and then you're going to buy at a discount. And it is as simple as that. That is pretty much the basics of what it is. Now, to very quickly just go over what a institutional candle is, just think of a candle just like that. Let's give it a down candle, and then let's give it another candle here of price moving higher. Think of an institutional candle. I'm going to call that, give that my green candle because that's an up candle. It is the last down candle before price moved higher. And on the flip side as well, I'm just going to call that that's going to be my down candle right there. And then I'm going to draw another candle to signal price coming down. That there is going to be green. On the upside, your last up candle before price moves down. So an institutional candle, IC candle, I shorten it, is the last candle before price moves in the opposite direction. So that's what you're looking for. And you're looking for a candle which is the last down candle or the last up candle before price has actually moved in the opposite direction. So then to identify what an FU candle is, imagine price is pushing higher and then obviously drops. So now let's just put your up candle here and let's put your down candle here, just like we did on the previous slide. But the difference with an FU candle, which is identified to be here, is that it is the candle which swept liquidity. So because this candle took this liquidity, we've then got ourselves an FU candle. And an FU candle is literally what it says on the tin. You know, that's what it's saying to the liquidity. It's saying FU to the liquidity, I'm going to come and take it. So to measure the opposite, you know, exactly the same thing, I can draw another candle here. That's my down candle. And then price is going to move higher. There's a green candle. I'm going to measure that there, the open of that candle. It's an FU candle because it took out liquidity. So this here is, you know, FU candles. And then that basically means, you know, an FU candle is the last candle before the change in direction which swept liquidity. Highs or lows. So there's your FU candle. So we've done institutional candles, which is here, and that stands for institutional is IC, so just use that as an IC candle. We've also got FU candles, and we're just going to go over imbalance very quickly. So imagine you've got this down candle. I can do this in either direction. You've got then, well, let's say price is actually, let's say with prices up, so that there can be a green candle because that's the last up candle. And then what's going to happen is price is going to do that, carry on moving down, just like that. And imbalance, because what you get is wicks, so the open and close of a candle and where price obviously traveled to and from. As you can see, I'm drawing these wicks here. Now, imbalance is basically where there is inefficiency in the marketplace. So we can see here we were buying and then we sold aggressively. Once we sold aggressively, we came back up. This is the open, this is the close. This is where the wick went to its lowest, which is where price went to its lowest when that candle was open. This is where the candle went to its highest. You can see these wicks here don't meet in the middle. We can see there's an imbalance. This here is imbalance. So that is my imbalance area right there. So this here is, I'm just going to highlight that. Imbalance. Right there. Okay, and you just need to understand the candle closures and things like that. So open, close of the candles. There's another video for that. But essentially, that there is what you're going to look for inside your accumulation areas. So hopefully now, to anyone that is completely new, you now understand an IC candle. You now understand an FU candle. You now understand imbalance. And hopefully, we can identify certain things on the charts in terms of actually trying to get into these areas here. So I'm actually just going to make sure I save these images here so that you've actually got them if you're inside that Telegram group. So I can actually send the information straight to you. So we've got accumulation. We've got distribution. We're going to do your example for your accumulation, your distribution example. I'm just saving these pictures really quickly. And then your buying, your discount levels. So we've gone over that. Again, if you have missed it, don't worry. It'll all be recorded. And then I've explained institutional candles. Save that. And then FU candles and imbalance. So that is all saved. That will be coming into the Telegram group. If you are not inside the Telegram group, please join. This here is the information that you need. But what we can do now is, have a little look at some potential examples. So, we can get rid of all this analysis. So already I can see here, good example, and I went over this yesterday with someone. We can see price has made this low right here. So that there is a liquidity sweep. Liquidity is money. There's a separate video on this YouTube channel for liquidity, guys. So if you want to learn about liquidity, it's in the Telegram group, and there's also one on the YouTube channel as well. But essentially, we can see price is broken above this high. So we measure this 4-hour range right here. And if I actually replay this, just to be as specific as possible, I'm going to play one more candle. Let me get rid of, yeah, that'll be fine. So we can measure this range. Now, within this range, what have we got? we've got this area here, which is your discount area, as we went over. So we're looking within this discount area for what? We're looking for IC candles, FU candles, imbalances. Imbalances. I do apologise about my spelling, guys. And I'm going to move that at the bottom just so we can read it better. So now I can get rid of the fibs. I don't need them anymore. I'm going to keep my chart clean at all times. And I can really have a look at what's going on. So I can look for something that might be happening. And if I replay mode here, and this is the thing about the charts, it doesn't always look as clean when it comes to trading. But essentially, you know, we can see we were in this sort of consolidation phase. And now, you know, there's two areas here that we can kind of identify. Now, price has swept this low right here. And because we've swept this low right here, we've come down, we've pushed higher. So that there is a bit of that's a break, but we've got an aggressive break up here. So what we can do is identify this area here. This is your point of interest. That's your last down candle before price moved higher. And you can identify your trades to be in somewhere like this. And you can literally set your entry, your low below the low, target these areas up here. Now, let's say you took that and you came into profit. Perfect. That's a trade. It's within your discount area. It's within your point of interest. Perfect. Let's say you missed that trade. Okay. What we can then identify is what's price doing now. We've actually swept higher again. So we've come in and we've broken structure again. Let's go down to a 15-minute time frame. We can see the structure break happening here. Now let's measure this trading range. We can see within this area here, this is our 50% area, discount area. Within here, I can see some imbalance right there. I can also see this last down candle, which swept this liquidity, which is an FU candle. So there's liquidity grab. Now I'm not going to count this candle because this one's got more volume in it. So I'm going to highlight this candle right here. You've got reaccumulation. That's when accumulation has happened again and again and again. So now you could literally set your entries. You could have your stop here. You could have your stop here. You could be targeting these highs up here. Whatever you want. And then you let price play out and see what happens. You know, price has gone a little bit higher. If I target, you know, up here somewhere. Might not get us in. And we're in the trade now. So you can see you're in the trade and it's taking you straight into profit. I mean, look at that. That is all you have to look for. And it's exactly what we've gone over. I mean, if you held that, that's a 5-to-1. 4-to-1, 5-to-1. You know, it's just incredible. The price action you could be getting in here. So hopefully, you know, that's kind of explained a few things of what to look for. And hopefully this has broken things down for you. But essentially, that there covers the basics of this strategy. Now, there's obviously more we can do and more we can go over and things like that. But yeah, watch this video, watch it as many times as you need to for it to sink in. Have a look at some examples. Have a look at areas, pick out areas you like, and do this for real. Backtest it because this stuff works. Once you get good at this type of way of trading, honestly, you can be as consistent as you ever need to be in your life with this. It is a complete and utter life changer. And my motto and the thing I always want to make sure everyone does is they keep things super, super, super simple. And that's the best way and the best formula. And it's just by following a process. So now we know about accumulation, distribution, all the candles, the discount areas, the premium areas, the FU candles, the imbalances, trading in time with the high time frame, the direction. And you'll get there. You know, it's not going to happen overnight. It's not going to happen tomorrow, next week, next month. But as long as you don't quit, you'll get there. And this here can really help turn things around for you. So hopefully you've enjoyed this video, guys. If you have any questions, please let me know.